Hi, John. Welcome. I'm glad we could meet today to discuss negotiation strategies. How are you?
Thanks, Lucy. I'm doing well, and I'm looking forward to sharing ideas on effective negotiation techniques.
Great. Today's focus is on negotiation tactics for securing the best deals in business settings.
That sounds perfect. Effective negotiation can make a significant difference in achieving favorable outcomes.
Absolutely. Let's start by identifying the key elements of a successful negotiation. What's your perspective?
I think preparation is the foundation. Understanding the other party's needs is essential for a good strategy.
I agree. Researching their goals and potential pain points can help tailor a win-win solution.
Right. And setting clear objectives for yourself is equally critical. Without them, you might lose focus.
That's a great point. Clear goals give you direction and help measure the success of the negotiation.
Exactly. Also, understanding your bottom line ensures you know when to walk away from the table.
Yes, knowing your limits is crucial. Overcommitting can lead to unfavorable agreements.
True. Another essential skill is active listening. It helps uncover the other party's priorities.
Absolutely. Listening carefully allows you to identify opportunities for compromise without jeopardizing your interests.
Exactly. It's about finding common ground and ensuring both parties feel satisfied with the outcome.
Speaking of common ground, how do you feel about opening with small concessions to build trust?
I think it's a good approach, but it's important to ensure those concessions don't undermine your position.
Agreed. They should be strategic and create goodwill, not signal weakness.
Definitely. It's also essential to communicate your value clearly to justify your terms.
Yes, articulating value can make your proposal more compelling and harder to dismiss.
Right. And being flexible is important too. Sticking rigidly to one approach can limit opportunities.
Flexibility shows adaptability, but it's also important to know when to stand firm. How do you manage that balance?
I rely on prioritization. Decide which points are non-negotiable and where you can afford to compromise.
That's wise. It prevents unnecessary conflicts and keeps the negotiation process constructive.
Absolutely. Maintaining a positive tone and building rapport also play a significant role in successful negotiations.
I couldn't agree more. A collaborative atmosphere often leads to better long-term partnerships.
Exactly. Trust is a valuable currency in business relationships, and negotiations are a chance to build it.
On that note, what's your take on handling aggressive tactics from the other side?
I recommend staying calm and redirecting the conversation to focus on shared goals.
That's a solid approach. Reacting emotionally can derail the negotiation and harm your position.
Right. And if necessary, taking a break can help de-escalate tensions and reassess your strategy.
Good idea. A short pause can give you time to refocus and maintain control of the discussion.
Exactly. It's also helpful to have alternative solutions ready if the original proposal faces resistance.
Absolutely. Backup options show your adaptability and can keep the negotiation moving forward.
And when you present alternatives, make sure they align with your core objectives.
Of course, alternatives should enhance the deal, not compromise your key priorities.
Agreed. To wrap up, clear communication and mutual respect are the pillars of any successful negotiation.
Well said, John. Thank you for sharing such valuable insights today. It's been a productive discussion.
Thank you, Lucy. I've enjoyed it as well. Let's aim to implement these tactics in our next negotiations.
Definitely. I'm confident these strategies will help us achieve excellent results in future deals.
Me too. Thanks again, Lucy, and I look forward to our next conversation.
Likewise, John. Have a great day.
You too, Lucy. Take care.
Now, Let's take a look at the meanings of some words mentioned in the conversation.
Concessions. Agreements or compromises made during a negotiation.
The company offered small concessions to reach a favorable deal.
Jeopardizing. Putting something at risk or in danger.
Rushing the decision could end up jeopardizing our position in the market.
Articulating. Expressing thoughts or ideas clearly and effectively.
She did a fantastic job articulating her vision for the project.
Prioritization. Determining the order of importance for tasks or goals.
Effective prioritization helps ensure that urgent matters are addressed first.
Rigidly, in a strict, inflexible manner.
He rigidly adhered to the rules, leaving no room for creativity.
Undermine. To weaken or damage something, often subtly.
Criticism from the team can sometimes undermine the leader's confidence.
De-escalate. To reduce the intensity of a conflict or problem.
The manager stepped in to de-escalate the argument between employees.
Constructive. Serving a useful purpose or helping improve something.
The feedback from the client was both constructive and actionable.
Compelling. Evoking interest or admiration in a convincing way.
The lawyer presented a compelling argument that swayed the jury.
Redirecting. Changing the direction or focus of something.
She redirected the conversation to address the team's main concerns.
Good morning, John. Thanks for taking the time to discuss financial reporting best practices today.
Good morning, Lucy. It's a pleasure. Financial reporting is a crucial topic for every organization.
Absolutely. Accurate financial reporting builds transparency and trust with stakeholders, including investors and regulators.
I agree. Shall we start by discussing the key principles of effective financial reporting?
Yes, let's begin with accuracy. Ensuring financial data is precise and reliable is the foundation of good reporting.
That's true. Errors in financial reports can lead to misinterpretation and even legal consequences.
Exactly. Consistency is another important principle. Reports must follow established standards and formats every reporting period.
Consistent formatting also helps stakeholders compare financial performance across different periods effectively.
Agreed. Timeliness is equally important. Reports must be submitted promptly to meet regulatory and internal deadlines.
Late submissions can damage credibility and disrupt decision-making processes within the organization.
That's why having a clear reporting schedule is essential. How about focusing on compliance next?
Compliance with accounting standards like GAAP or IFRS ensures reports are universally understood and accepted.
Yes, and following these standards minimizes discrepancies and increases confidence among external stakeholders.
Do you think automation tools can help improve compliance and reduce errors in financial reporting?
Definitely. Automation streamlines data collection, processing, and reconciliation, saving time and improving accuracy.
I've seen tools that integrate directly with accounting systems to generate real-time financial insights.
Those tools are excellent. They also reduce manual work, freeing up time for strategic financial analysis.
Speaking of analysis, do you think visualizing financial data adds value to reports?
Absolutely. Charts, graphs, and dashboards make complex data easier to understand for stakeholders.
Visualizations also highlight trends and anomalies that may not be obvious in raw data.
Exactly. They're especially useful for board presentations and investor meetings. Let's discuss internal controls now.
Internal controls safeguard data integrity and ensure only authorized personnel can access financial systems.
Yes, Segregation of duties is a key control measure. It prevents conflicts of interest and errors.
Regular audits also strengthen internal controls and identify areas for improvement in the reporting process.
Agreed. Audit trails are invaluable for tracing transactions and ensuring accountability.
What's your take on segment reporting? Does it help organizations better analyze their performance?
It does. Breaking financial data into segments like regions or product lines offers deeper insights.
Segment reporting also helps identify underperforming areas, enabling targeted improvement strategies.
Absolutely. Now let's touch on stakeholder communication. Clear reporting language is vital for effective communication.
Complex jargon can confuse readers, so reports should use straightforward and concise language.
Yes, and providing a narrative to explain key numbers adds context to the financial data.
A well-written management commentary helps stakeholders understand the story behind the figures.
Agreed. Transparency is critical, especially when addressing challenges or unusual variances in the data.
Honesty builds trust. Hiding negative details can backfire and damage the organization's reputation.
Exactly. Stakeholders value candor as much as they value strong financial performance.
How about forecasts? Including future projections can help stakeholders plan better.
Yes, but projections should be realistic and supported by credible assumptions and historical trends.
Overly optimistic forecasts can mislead stakeholders and create unrealistic expectations.
That's true. Stress testing different scenarios adds credibility to financial projections.
Absolutely. Scenario analysis prepares organizations for potential risks and opportunities in their financial future.
Let's discuss training now. Do you think financial teams should regularly update their skills?
Definitely. Continuous training keeps teams updated on new regulations, tools, and best practices.
Agreed. Investing in training reduces errors and increases overall reporting efficiency.
What about collaboration between departments? Does it improve the quality of financial reports?
Cross-departmental collaboration ensures all relevant data is collected and no critical information is overlooked.
That's a great point. Finance teams benefit from input from operations, sales, and other departments.
Yes, holistic input makes reports more comprehensive and actionable for decision-making.
Let's talk about external audits. Do you think they add significant value to the reporting process?
External audits provide an unbiased review, enhancing the credibility and accuracy of financial statements.
They also ensure compliance with regulations and boost confidence among investors and creditors.
Absolutely. Partnering with reputable audit firms can elevate an organization's financial reputation.
This has been an insightful discussion, Lucy. Do you have any final thoughts on best practices?
Just one. Regularly reviewing and updating reporting processes ensures they remain aligned with business goals.
That's excellent advice. Thank you for sharing these valuable insights.
You're welcome, John. I enjoyed our conversation. Let's apply these practices to strengthen our financial reports.
Agreed, Lucy. Thanks again, and have a great day.
You too, John. Talk soon.
Now, let's take a look at the meanings of some words mentioned in the conversation.
Segregation. The act of keeping different elements separate, often to prevent conflicts or errors.
Segregation of duties helps minimize fraud risks in financial systems.
Variances. Differences between planned and actual results in financial or operational contexts.
The manager analyzed variances in the budget to understand overspending.
Narrative. A written explanation or story that adds context to data or events.
The financial report included a narrative explaining the reasons behind the profit decline.
Audit trails. Records that trace all activities related to financial transactions for accountability.
The system generated audit trails to monitor all financial adjustments.
Forecasts. Predictions about future performance or outcomes based on historical data.
The company's financial forecasts indicated strong growth for the upcoming quarter.
Assumptions. Beliefs or statements taken as true without proof, used as a basis for action.
The business plan was built on optimistic assumptions about market growth.
Scenario analysis. A process of evaluating potential outcomes by analyzing different situations.
The team conducted scenario analysis to prepare for possible market changes.
Timeliness. The quality of being done quickly and within a specific time frame.
Timeliness in reporting ensures all stakeholders have up-to-date information.
Alignment. Agreement or cooperation among individuals or groups towards shared objectives.
The CFO ensured alignment between the financial and operational teams for accurate reporting.
Stress testing. Analyzing systems or plans under extreme conditions to assess their resilience.
The financial model underwent stress testing to evaluate its reliability during economic downturns.
Thank you for watching our video.